Okay, hi guys. Let us look at gold. Now, to start things off, I looked at gold last week. I was looking for buys, and the market sold off slightly, but nothing's changed. So, to start things off, I'm gonna draw in market structure. So, I'm gonna draw in something like this. Also, gonna draw in something like so, and then I'm gonna draw in this, and I'm gonna draw in a low. Okay guys, so what you're looking at here is this channel, this ascending channel. So we have something it's called the M style pattern, where you have price pushing up, pushing down, and then creating your retouch channel like so. Can you see? So it's a double top, something like this, and then can you see? So our double top is here. Can you see double top? This means that this is a selling pattern up until the low, right? We want to sell up until the low. That is how this pattern works. So I'd say we were technically looking for sales all along, and now as I move on to the lower time frames, you will see something different. But before I move on to the lower time frames, it's time for me to assess what's going on. Now, looking at price as it is, I have a strong feeling we are gonna go up until somewhere around here, and I'll tell you why in a second. Okay, so this becomes our impulsive wave. This becomes our correction, one big correction, which means we are anticipating a push up. So we're gonna look for our buys. Now moving on to the daily time frame. So when I fix structure, I can see that we have another pattern forming. It's a descending channel. So the structure in yellow is the ascending channel. The structure in blue is a descending channel. And mostly when dealing with descending channels, we tend to buy, right? So now we have two reasons to buy. The first one is price action is telling me we're going to be bullish. The second reason to buy is because we have a descending channel. Can you see the structure in blue? This is a structure that we use to buy most times. Now, before I continue, I want us to look at the structure. It's gonna be the red structure. So now the red structure, as you can see, so this is what disturbed me from not taking my buys last week, right? So as you can see, the market sold. So if we hide this for a sec and we focus on this here, you can just think that this red candle is one big impulsive push downwards, and it's followed by a correction which is pointed upwards, which means we can expect one more push down before price continues higher. To be honest, I'm not expecting price to drop any lower. Price action is telling me that we can move up right away. And also, I've seen this many times. Whenever we have a, can you see, we have a descending and we have an ascending. Not, it doesn't happen always, but sometimes this red pattern, it can catch people on the wrong side of the market. Hence, I call this the dummy correction. What can happen is the moment you decide to sell, price can continue higher, right? Why? Following this impulse correction on the third touch, we buy. Can you see? So you just need to be careful here. But then from my side, what I see happening is I see price pushing up, which means on the lower time frames, I'll just be waiting for my corrections, my bullish corrections, and I'll be catching them as they come. And my target is around the 2,500 level, somewhere around there, somewhere around there. And if you're wondering why, when we measure this impulse and we put it somewhere around here, can you see it lines up nicely with somewhere close to my target? So I'm not looking for the full move. It's just that when I study price action, it tells me that we can stop somewhere around here. That is why I'm going for that smaller target. Now for entries, any correction I see, and if it makes sense to me, I'm gonna take it because the bullish momentum is strong here. So any bullish flag that I see, I will take it. Then I'm gonna target the high. So gold does look like it can offer us a bit of a decent profit moving on. So somewhere around here, price doesn't have to continue lower, but it can. It can. Nonetheless, even if it comes down here, I'm still gonna look for my buys. So for gold, I'm looking for my buys. Moving on to the next pair. Now the next pair is USD CAD. Starting off on the weekly time frame, what do we have? Okay, let's put our low. Let's put our high. Okay, now that we've done that, you can see we have an impulse down followed by a correction, one more impulse down, correction, then we have an impulse up. It seems like we are currently forming a correction. So if those green candles an impulse, it means now we are forming a correction like this, perhaps a three-touch correction, then we can move up like so. That's the weekly time frame. And when I look at price action is also bullish here. Something tells me we are bullish. Moving on to fully break this high, some above, we just need to break this high. Moving on to, let's move to the 4 hour. Let's move to the 4 hour. Okay, we have this descending channel. Okay, we have that descending channel. Let me delete this for a sec. We have this descending channel, and normally with descending channels, let me show you something. Let me hide this. So with descending channels, we normally expect the market to move up from the third touch up to here. You can see, so buy up until that level. But currently what happened, when you look at what happened, the market is struggling to get to that level. So that can be a concern. I can also see the structure. So let's make it blue. There's also the structure. And I can also say this. Let's make it red. Okay guys, so since this is a descending channel and we have not completed the pattern, it means we can make our way up to complete that pattern, right? So if I get the what is price action telling me? Okay, price action is telling me we can move up like so to break the side. Seems like we can stop some around here. So this can be my max level. So is the structure to support my buy? And indeed there is. If you look at this part, this can be our impulse, this can be our three-touch correction. What's the direction of the correction? The correction is pointed downwards. Whenever the correction is pointed downwards, we expect the market to do what? We expect the market to go up. Expect the market to go up. So that is why I will be looking for my buys. I'm not in yet, but price looks ready for me to execute. So over the course of this week, as you can see, the market is moving. You can see the market is open as I'm forecasting right now. So I'm just gonna wait for my executions, and then I'm gonna take my trade targeting the next level for something like 6%. We have a 32 pip, but before I continue, I can also see that it's very possible price can come down before it goes up. It's possible, but it's not really something that's threatening me to not execute, right? So worst case scenario, if I take a trade, it's possible I may get tagged out once more before I get my second entry, and then the market goes. But nonetheless, I'm looking for buys on USD CAD. Moving on to the last pair of the week. So we have Euro GBP. Okay, with Euro GBP, let's look at the weekly time frame. Okay, that's from a very long time ago. Let's delete everything. Okay, on the weekly time frame, I can see this massive structure. Actually, let's go to the daily time frame. I feel like the daily is too much of a, it's too big of a time frame for what I want to do. Okay, we have this, we have the structure. Okay, so looking at the basics, I can see we have this impulse, we have a correction. The direction of the correction is pointed downwards. The correction is falling. Whenever correction is falling, we expect the market to go up. Hence, I'll be looking for my buys. And also, we have three touches of the trend line. One, you can say this is two, this is the third touch of the trend line. So we are good for buys on Euro GBP. Let's look at the candles. Okay, we have a green candle. Let me look at the weekly. How did the weekly close? Okay, I will be careful. This one, I think it is better to wait for a correction and then take the trade, because now I don't like how this red candle closed. It closed with a wick. Normally when we close with a wick, we tend to see the market coming down to close that wick before moving up. So it does, the way the weekly candle closed, this one, the way it closed, it makes me uneasy. Hence, if I wait for a correction on the lower time frames, then it will make this a much safer trade. Speaking of, let's go on to the weekly time, the 30 minutes or the 1 hour. Looking at the hourly time frame, there isn't much, I won't lie. Firstly, price is corrective. Can you see? Price is corrective. So this suggests that it's possible one more drop is possible before the rise. So for me, it is better if I wait for the markets to push up, give me that nice correction, and then I'm gonna move up with it, like so. If I have something like this, my correction above, so my target will be, it will be a big target. This is a long-term target. It's a long-term target. Actually, let's forget about that. It's too far away. I think for starters, because we have this descending channel, I think it'd be best if we targeted this level. You can see, so that's a nice 9% position if the market gives us a nice beautiful correction. Another thing why this is a better entry is because look at it this way. Isn't it here we have this correction? If this thing succeed, then price should be coming down here, right? But if it happens that instead of the market coming down, the market pushes up and breaks above here, the third touch, and it gives you a correction above, then it means we will be respecting this descending channel. Can you see? So it means impulse 1 2 3 correction, the direction of the correction is downwards, meaning we should expect the market to go up. So that is why it's better to wait for the market to give you that correction up here, and if you see the nice entry, then take it. And then yeah, so those are the three opportunities that I'm looking at. I hope you will gain some value from this. See you on the next one.